And in business, Asian officials are stepping up rhetoric and defense as their currencies as they continue to tumble, while the US dollar charges ahead. Now, Japan, which intervened to shore up its yen last week, reiterated that it's ready to act against speculative moves, dragging the currency lower. Finance Minister Sunichi Suzuki says that there's no change in the government's stance as it will react as needed. In an effort to show a united front with the central bank, he said both share a common understanding. Now, Bank of Japan Governor Haruhiko Kuroda says that the intervention, the first in 24 years, was appropriate, and he added that it was complementary with monetary easing. And that's even though the BOJ's ultra-loose monetary policy was a key reason for the yen's depreciation. In South Korea, authorities are trying to calm fears of a potential sovereign bond default. The won's slump to its lowest in nearly 14 years has triggered worries of a default which occurred during the 2008 global financial crisis. Now, they say that South Korea's reserves are strong enough to fight dollar shortages. Analysts also point to the ease that Korean companies have in borrowing or attracting investments. Indonesia's central bank, on the other hand, says that it's always in the forex market. The head of Bank Indonesia's Monetary Management Department said that it was ready with triple intervention measures to prevent excessive falls in the rupiah. And that refers to intervention in the spot, domestic non-deliverable forwards, as well as bond markets. Now, as the U.S. central bank takes rate hikes to the limit, a surging dollar is again wreaking havoc in currency markets. The dollar index, as you can see now, 0.4% up, 113.63. The collapse of the British pound also helping to boost the gauge to a new two-decade peak. Asian currencies weakening against King dollar, raising concerns about capital outflows. RMB now changing hands at 7.158 to the dollar. The PBOC trying to slow the yen's decline, I should say. It set the reference rate weaker at 7 renminbi per dollar today, the first time since 2020. And it's also increased the reserves that bank must set aside when selling certain forex derivatives, making it more expensive to bet against the currency. The Korean won also dropping to 1,428.99. The risk-sensitive Aussie dollar also hitting its lowest since May 2020. Asian currencies not the only ones suffering under a strong dollar. The British pound plunged to a new record low against the greenback after UK Chancellor Kwasi Kwarteng vowed to pursue more tax cuts. The pound below $1.10 for the first time since 1985, following the release of the UK's biggest tax giveaway in half a century last Friday. But signals of further tax cuts triggered a frantic sell-off, causing the British currency to fall to an all-time low of 1.035 earlier today. It has stabilized somewhat. Now, it also fell to a two-year low against the euro. Many are warning that the pound could fall to parity with the greenback. Analysts say that the crash is signaling the lack of confidence in the UK economy at a time when the current account deficit is running at more than 8% of GDP. Analysts say investors are now looking out for a response from the Bank of England. There is speculation that the country's central bank will set up an emergency policy meeting soon. And earlier we spoke to Saktiandi Supat. He is regional head of Forex reserves at Maybank Group in Singapore. He tells us how a strong dollar could impact Asian currencies.
If these losses deepen, there's a few things. If the currency weakens too much, exacerbation of the currencies in Asia as a result of what's happening of the UK, because it talks about the sovereign credit issues out of UK. The impact would probably be more still by the sentiment channel, maybe portfolio rebalancing issues, but not so much economic as yet. But with the depreciation of the currencies, it may have an impact in terms of inflation pressures not being able to be mitigated somewhat in some of the Asian countries. Some of these losses are actually a function of concerns of potential recession risk coming out of the US and even Eurozone and UK as well. All that will permeate into the Asian side of things going going forward. We need to look out for some of the key major emerging economies within the region, even our neighbors in terms of ringgit. It's broken the 460 level. And whether it's going to be sustained beyond that, above that for a longer period of time is something we'll look out for. Similarly, for the rupiah, it has actually moved, but it has not moved to levels that we've seen during the Asian crisis in terms of one-day moves or two-day moves. So I think levels may not be useful. I think we want to look at more sustained depreciation of the currencies and whether there would be efforts by the central banks to sort of protect their purchasing power of their residents or citizens.